Okay, this is Timing Strategies client blog update for Monday, October the 6th. And boy, oh boy, it's been a while since our last update. And I've been out of town. I haven't done a whole lot. I'm going to bring you up to speed real quick. And everybody knows the stories and all the garbage and all the flap from the media pipe, so I'm not going to go into that. Where we left off at, we were looking to buy at about that level of 1130. Right in this level of about 80 to 120%. We actually bought a little bit on that day, not much. We bought 15%. I took it off back up here, nothing to make a big deal, but we were basically long as of this point. What I'll do here is just kind of make it clear is that what we did is, never mind. At this point we were long 60%. We did not get long the 80 to the 120 that we were looking at. What we did do is we did get long today, a net long of 90% on this day. Now, that could be considered suicide or playing chicken with an oncoming steamroller at, moving 100 miles an hour. But the internals, everything that we've gotten today indicates that there should be, and again, should is the operative word, at least some sort of regression bounce. The bounce should take this market up at least to test those lows that we put in back Friday? Seems like a long time ago, doesn't it? But no, not really much at all. So we're looking at potentially a bounce up to at least 1120 to the breakdown level. Who knows? There might be a gift, and it might get us somewhere back up into the range of the prior breakdown level of about 1190 to 1200. Somewhere in that level, I don't know. Everybody's looking for the oversold bounce. Obviously, looking for it and doing something about it are two different things. But the thing is, everybody looking for it, in my opinion, means it probably ain't going to come. So, and I've been wrong. I'll be wrong for, many times in the past. I'll be wrong in the future again. But you got to put money where your mouth is when you manage it. So right now we're sweating it a little bit, but we're long 90% using a basket of the S&P, Dow, NASDAQ, Russell, and the energies and precious metals and short bonds. So we've got a basket diversification. The energies I think are going to get the biggest pop. Let's take a real quick look at the XLE. And you'll see that's kind of where we got long that basket of energy on the XLE and the GDX right here. So we brought that up to bring this in 20% total. Let's go 10% here so you know. And so we're long 10% as of that day on the XLE. Let's go to the GDX. Same thing there. We're long 10% as of there on the same day for the GDX. Long story short, looking for a bounce in all, again, the markets, starting using the S&P as a proxy. We're also short, let me use the TLT as an example. We're short 10% on the bonds right here. I'm expecting this to pop and to drop back down. And again, that would be a benefit to our short position in the bonds. But I don't want to sound like an alarmist. I don't want to sound like a doomsdayer. But today has got me a little bit rattled. We did not get the capitulation that I would like to have seen. We got people buying in towards the close. That was partially the Fed trying to rescue everybody, and also the specialists in the New York trying to get their price book back to break even. Again, estimating that we should see at least a test to the breakout level of 1130. Could get us back up to as high as 1190, 1200. At that point, what am I going to do? Chances are I'm probably going to go flat, maybe start looking to get short again. It's a day-by-day thing. This is a multi-generational historical type market. Nobody trading this market has ever seen anything like this before. And I mean, that's everybody. Not, even the 40-year-old veterans haven't seen this stuff. And I'm a 12-year-old veteran, so many people with a lot more time on me than I have. And they haven't even seen these kind of markets. So my estimation, and people that I'm talking to that are very respectable, kind of following some leads and doing my own stuff as well on the internals. But we should see the bounce. It should give us about a 5% pop back to the breakout level, or to the breakdown level. Maybe back up somewhere in this range, 1200. If we can get 1220, that's probably going to be the start to look to get short. Now, anything above, make this real quick, anything above this price tag over here of where our illustrious Treasury Secretary pulled a stunt, basically since he's really taken hold of the wheel, we've lost. If you look at this market, since Hank Paulson got a hold of everything here, our Treasury Secretary, he's basically managed to wipe out 21% from the 19th of September until today of the lows. Hank Paulson has been able to wipe out 21% of the total market value of our stock market. Now, he's not totally responsible for it, but his maneuvers and his posturing have pretty much generated this type of problem, as far as it's coming to the surface. Beyond that, I don't know what to tell you. I'll do a post if I do anything with our accounts later this week, but beyond that, it's a day-by-day thing. All right, if you have any questions, please feel free to give us a call, and I'll do my best to help answer them.